I'm joined today by Rob Goddard. He is the chairman of S Cubed. Between them at S Cubed, they've got over 300 years of experience in M&A, and they're responsible for over 350 successful transactions. He is a mentor, investor, international speaker, and is truly someone who is highly respected in the M&A space. Rob, thank you for joining us today.
Hello there. Well, thank you for that build-up. Hopefully I won't disappoint people. Just as a point of accuracy, S Cubed is fairly new. I own 3 M&A businesses. S Cubed is the latest one in the family, and we help companies start up, scale up, and sell up.
Okay, perfect.
Me, myself, as you say, I've had several hundred transactions under my belt in the M&A world since, 25 years. I feel
Wow.
old now.
You don't look it.
There isn't much I haven't seen.
Yes,
I'm happy to share some of those experiences and tips and guidance
100%.
with the audience.
We're definitely excited to get into that. Before we do, though, just give us your background, how you ended up in M&A, how's the journey been up until now?
Yeah, the first half of my working career was banking, and then I got fed up with that after 16, 17 years. So I went off with my young family at the time to go and live in a commune in America, feeding the poor.
Oh, nice.
Had a year off, and then came back from California and worked for a business that in the UK that provided or generated sales leads for engineering firms. And I spent 4 years there. And then I got headhunted by an M&A company. Well, it was early doors for them as a business brokerage, and they were 1.5 million turnover. And they said, would you come and join us as a general manager and grow it? So I didn't really know much about M&A. All I knew was from Hollywood, which was Pretty Woman and Richard Gere, because he
Okay.
was involved in M&A.
Oh, is it? Oh, that's interesting.
Yeah.
I didn't know that.
You want to go and say, anyone that hasn't seen it, it's definitely worth seeing it. I mean, it's a few decades old now, but I didn't really know about M&A. So I had 7 years at that company as GM, and I took from 1.5 mil to 15 million turnover as general manager. So I had a 7-year apprenticeship, and then we parted company, and I set up by myself in 2008. And then a week later, Lehman Brothers went bust, and then we had a world recession for 5 years, double recession.
I remember that.
So I've set up my first business in some of the hardest trading conditions. So I'm definitely battle hardened in the business world. And since 2008, I've been involved in the world of mainly selling businesses, but I have represented buyers, acquirers. I've done quite a few investment fundraising and quite a bit in recent years of business mentoring, helping business owners navigate that business journey, which can be quite tricky sometimes. So to have someone in the trenches, as far as they're concerned, is helpful. That's been there, done it, worn the T-shirt, got the battle scars, and can help them scale up their business. So that's me in 3 minutes.
Perfect. I know you've got something called the 11 commandments of selling a business. I don't expect you to go through all of them, but can you give some value for the viewers as to what some of the most important things you need to think about when you're selling a business?
Yeah. The actual book, it is the 11 commandments, but it's also the 7 cardinal sins of selling a business. And in fact, most people who buy the book actually go straight to the cardinal sins segment. It's really, the purpose was to encapsulate my experience in doing transactions successfully, and sometimes what caused a problem. What were the pitfalls? So there are 11 things that I've found that are must-haves if you want to sell your business for a premium price, because any fool can sell a business for a low enough price. The real trick is selling it for a premium. And there are 11 must-dos, and they're encapsulated in the book. And I go around on the speaker circuit and I talk about those things. But I also talk about the 7 cardinal sins, because a lot of business owners, if they either try to sell their business themselves, or they use a broker that, quite frankly, business broker that's frankly not up to the job, there are 7 pitfalls, main pitfalls, to either having to sell at a big discount or not sell it at all. There's only 1 in 5, roughly, 1 in 5 businesses sell. It's a really low conversion rate in the industry, and there's good reason for that. So the book's there designed to help people steer through that and get success first time and sell their business for everything that they were looking to generate from the sale.
What are some of the main pointers, though, when it comes to selling a business?
Okay.
What sticks out to you?
Yeah, so the primary one, and it's one of the 11 commandments, is always create competitive tension. A lot of business owners don't. They usually get approached out of the blue, normally from a competitor who says, "Hi, we're interested in buying your business. You know, we've admired it from afar for a number of years. We'd like to buy it." And now you've got a potential seller and only one buyer. And I've always said one buyer is no buyer, because there's no competitive tension in only speaking with one company. So if you want to drive up price and improve terms, if you're selling a business, you must speak, we found, with at least half a dozen companies. Get round the table. And that can take quite a bit of work. So definitely competitive tension. The next one I would say high on the list, and the accountants listening and seeing this will hopefully smile, get a good accountant, because the deal could live or fall with the quality of your financial reporting. Gaps, sometimes some interesting entries in the accounts. The other day I saw 66 grand put through as travel, and it wasn't business travel, it was their holidays. Nothing like declaring that you're taking income out without tax. So definitely financial reporting. And I'll say the third one is to get an experienced intermediary to act on your behalf, because selling a business is a second job. I can guarantee that, if you're going to do it properly. And you don't want 2 jobs. You want to just concentrate on the job that you have got, which is running your business. Because the last thing you want is a distraction, like selling a business, and the numbers are starting to go south, because that's not a good negotiating position. There's 3 of the 11.
Lovely.
Commandments.
Whoever wants the rest, they can go and buy the book.
They go on Amazon. And I have to say, any royalties go to mental health charities.
Lovely. Okay. So when someone is trying to sell their business, what do they have to do beforehand to get in a place? Say I'm coming to retirement age. I haven't got someone to pass the business down to. I don't want to just close up the business. How does my business need to look for it to, before I approach someone to sell it, to be in the best light?
Yeah, that's a really good question. And it's something that we do at S Cubed Advisory, is to do a front end piece of work to help the client, our new client, be sale ready, because not all businesses are ready to take to market. So one of them is to make sure that the financial reporting is in order, that there's no gaps in the financials. There's no, how can I put it, unorthodox entries on a set of accounts. One thing that often is missing is management accounts. So some business owners don't budget for the year ahead, and don't have monthly management accounts to track progress in the current trading year. That's no good for a buyer. They want to know where the business is now. And also, I have to say, and it often is missing, is a 3-year financial forecast. What does the future look like for the business? Because a buyer is buying the future, not the past. They can't do anything about the historics. It gives them a guide about the past, but any buyer is buying the futures. And the seller has got to be able to articulate where the business is likely to be in the next 3 years if it didn't sell. It's a nice psychology then, isn't it? That this business is on the up and up. So buy it now, otherwise you may not be able to afford it in 3 years. So it's a very nice psychology. Rarely would I ever, as a shareholder, mention to the staff that you're looking to put it on the market.
Okay. Why is that?
That will scare the horses.
Okay.
It will spook them.
Yeah.
Because until the ink is drying on the contract, you haven't got a deal. And so you could really worry people, because and I understand this with staff, team members. If they know the company they're working for is up for sale, or will be up for sale, they'll be thinking negatively. Is my job safe? Which is very...
That's the first one, yeah, for sure.
Yeah, so really, you've got to keep it confidential. So, I mean, that's until the deal is done. And normally the staff, the team should know that the business has been sold on day one, where there's a joint announcement between the old owner and the new one. And if it's positioned correctly, it's a really positive message about the future, particularly if it's a larger company that's just acquired a particular business, the enhanced career progression, very good news for the company that's just been bought with the senior team, because any acquirer is going to want to keep hold of those individuals, senior managers, directors. So as long as the messaging is thought about and crafted in the right way, it's a very positive message. So yeah, definitely don't share things. I think often, just returning back to your question, sometimes the business is ready for sale, but the owner isn't. And by that, I mean that they haven't properly squared the circle about letting go.
Are they emotionally attached maybe to
Absolutely.
The
it's their baby quite often. We're talking about owner managers, usually that have founded the business. So it's part of their identity and their DNA. And now they're selling it. So it's not uncommon for the old owner to be retained for a period of time in the new company with the new owner, but that can be quite a difficult journey, because now that they used to be a legend in their own lunchtime, the previous owner. Now they've got a boss who's just bought their business.
Yeah, that could be hard.
So when you're selling a business, one of the determinants as to who to sell to is, do I like these people? Are they going to look after my team as best as I can tell? Is there a good chemistry? Because it's all right about receiving the money, but it can be a very long period of time, that transition and handover. So you've got to like the people that you're selling to. And shared, ideally, similar values.
Yeah, that's important, definitely. Perfect. Well, let's move on to what is happening in the industry right now. What are some of the biggest shifts you're seeing? What are some of the trends that you're paying close attention to right now?
There's a couple that come to mind immediately. One is people that are in the role of buying businesses, but they haven't got their own cash. So they're going to borrow the money in some shape or form. And there's nothing wrong with that. In the industry, we call it a leveraged buyout. I have found that quite a lot of sellers are quite nervous about that, because in their mind, the seller has in their mind who the ideal buyer is going to be. And that they're picturing someone with bags full of cash that will let them go at the end of the week.
Yeah.
With a sack full of money. It doesn't work like that. So that has been quite a shift in the M&A industry, is private individuals buying businesses with no money down, i.e. they're not putting in any of their own cash in, or a small amount of cash. Another shift in the industry has been the slowing down, particularly since COVID, and it really hasn't recovered, is deals are taking longer to complete. There's a lot more due diligence. There's a lot more searching for a slice and dice of information. And that's understandable. The downside of a slowing down and a business sale process is that you can get deal fatigue creep in, where one or even both parties, buyer and seller, just get fed up.
Yeah.
It's gone on for 2 years and they still haven't completed. So part of our role, and we try and coach accountants and legal lawyers that are involved in the sale process to do the same as us, is to keep that momentum going. Because if it drags out, someone is going to leave the negotiating table, and that's the last thing that we all want. So keeping momentum is really important. It's become harder in recent years because of the general slowing down of the process. It also means that's another advantage of competitive tension. If you've got more than one potential buyer, more than one company that's made an offer for your client's business, if the preferred bidder pulls out, you've got maybe another company, another two companies to approach who've made offers of a similar level, and you can go back to them. So having competitive tension increases choice. And does make you as a seller feel a little bit more gung-ho.
Yeah.
You know, if the preferred bidder starts chipping on price during due diligence, then you can
you've
bring
got options. Yeah, of course.
you've got a plan B, a plan C, and maybe a plan D. So that's always important when you're selling.
Gotcha. So back to what you said about people buying businesses with no money down. How would an individual go about doing that? Or what would be the best way to go about doing that in your
Well, I think it's pretty tricky. My suggestion and advice to people is start your own business from scratch. It's longer, and you have to put some of your own cash, definitely blood, sweat, and tears in. But you do learn a lot starting a business from scratch. I've done it several times. I have bought a business before. There is an advantage to buying an existing business, clearly, because there's clients and there's revenue streams and cash flow. The downside is that of buying an existing business is that you're going to be buying potentially some issues, either with the staff, financials. There could be skeletons in the cupboard that weren't disclosed and never came up in due diligence.
Mm-hmm.
It's hard for someone to buy a business if they haven't got their own cash reserves or an existing business that would act as the buying entity, because most sellers don't have that in mind as the new owner. What they have in mind is a large company with bags of cash that will buy them because they'll feel flattered.
Mm-hmm.
What they're not expecting is a private individual who's got to borrow all the money. And/or one way of borrowing money is something called vendor financing, which is I'll pay you some cash on completion today that maybe I've borrowed, and the rest will be paid to the old owner over the next few years, something called an earn-out. But that's based on future profits. And a lot of business owners are very nervous about that because the future payouts, they don't control, because now there's a new owner in place. So they've got 100% of their shares, but they're waiting to make sure that the new owner doesn't muck it up.
Yeah.
It's a tricky one if you're starting from scratch. I would suggest that someone sets a business up themselves, gets some substance to it, and then goes on the acquisition trail later on, a few years down the line. It's easier for the door to be opened with acquisition targets because they see it as an existing business and they're looking to retire or something. So it's an easier conversation. That's not to say there aren't there's people I know, because I've met them, that have done leveraged buyouts and have been successful, but it's a tough journey.
Yeah. Like anything, I suppose. I think, it sounds very attractive to approach someone, no money in your pocket, take their business off them, and all of a sudden you've got your own business. But as you've said, there's much more that goes into it. And I think what you're getting at here is that starting your own business gives you that experience to know when you go to buy someone else's business, all the things you need to be looking for, how to run a business, how to run operations, how to manage staff, and so on. So that's the experience that you're going to gain. If you go in with no experiences and maybe no partner to really walk you through that process, it will be quite an awakening call.
Yeah. And I know when I represent, 'cause I work on both sides of the table, not on the same transaction, because that's vaguely schizophrenic. And there's also a conflict of interest if I'm representing the buyer and the seller on the same transaction. But when I represent sellers, what they want is most of the agreed sale prices cash up front on day one. That's what they want.
Okay.
And the reverse is true of a buyer. They want to pay as little as possible up front and spread it over the never.
Yeah.
So that's where we earn our crust as an intermediary, is to find a midway path that works for both parties.
Okay. Lovely. All right. So where would you say that you see the biggest opportunities or risks for firms similar to yours over the next year or 2 years?
Yeah, it's a good question. Generally, bigger picture, I've came across a YouTube documentary talking about zombie companies.
Interesting.
In the UK, 20% of businesses, their debts outstrip their revenue. Which I found quite a shocking statistic, largely as a result of COVID and lockdowns, where there was money from the government to keep businesses alive. They're still carrying those debts, many of the companies, even now. So I foresee a stripping away, a falling away of companies that really have been struggling, bumping along the bottom. And that's an opportunity, of course, because you can sell distressed businesses. And that's something that we're able to do through one of our partners, is companies that are distressed and are struggling. are still saleable to the right sort of buyer. So I think that's one thing that we're going to see over the next couple of years, particularly with economic conditions in the UK. It's looking quite choppy for us as business owners, would be a euphemism. And so at times like that, the best companies always rise to the surface because they're able to pivot. They've got great leadership. They're able to perhaps revamp what they do and do it better. There's also an opportunity with other industries, newer industries, like relatively newer industries, like fintech, for example, and some of the sort of cutting edge pharmaceuticals. I've always found that niche sells. Where there's a company that's doing something very innovatively, I wouldn't say uniquely, because I don't think there's anything as unique. It doesn't exist, but I think there is scarcity value. Being able to do something quite differently to the wider market is a good thing to do if you're looking to sell your business down the line. Borrowing costs are another thing that will change because they're going up, probably. By the way, and I don't give investment advice. It's just my opinion.
Yeah, do your own research, guys.
Both retail and commercial rates are likely to be on the rise. And so I think where borrowing costs are increased, it's harder for acquirers to raise the sort of money that they're looking for to buy businesses. So I think there'll be a sort of a plateauing of activity.
Okay, and back to what you mentioned about the particular industries and niche industries. Would you say if I was someone who wanted to buy a business, that I should have some knowledge about that business or some passion about that particular business, or is it all about just if the numbers match up and the business looks good on paper?
Yeah, I would, generally speaking, only invest in what you know. I get inundated on LinkedIn with people who want to borrow money. I have an investor, and there's some really interesting sectors, but I know nothing about their sectors.
Yeah.
So why would I stick my hard-earned cash into something an industry I don't understand? So I would say if you're looking to invest or even start a business, look at your own background and expertise. What do you know in terms of sector, and what do you understand? I've been in financial services for 43 years. Insurance, M&A. There's lots of variances within those big sectors, but I've always been in financial services. So that would be my advice, is stick to what you know, because then you can add value. Not only can you invest in a business, even if you're not buying it you might want to buy a stake in a business and take an executive role. Well, you can only take an executive role if you've got expertise that the business needs, or even contacts. You might have a nice black book, really, that you can refer to, a contact book, that could open up new markets, new clients for the business that you've invested in. So I think generally stick to what you know.
Gotcha.
And understand.
Gotcha. Oh, that's good advice. So on to, similar companies like yours, what would you say are some of the biggest challenges companies like yours are facing at the moment, just in the market?
Yeah, there's a finite number of deals every year.
Yeah.
And it's not as many as you might think. And I know there's at least 1,000 brokers, M&A advisors, corporate finance people, probably more, but at least 1,000 out there. So it's a well provided for marketplace. So I think competition for third-party intermediaries has always been there. Beauty parades, as I affectionately refer to them. And there's nothing wrong with going to 3 different companies and getting them to pitch to you and see who you prefer. So I think the competition has always been there. What I have found, though, and I think it's again, it's an opinion. I am largely underwhelmed by many providers in the M&A space. There's some really good people that I've come across in the last 20 odd years, but there's a lot of mediocrity. I know this, particularly when I'm meeting sell-side business brokers. They don't add any value in a negotiation meeting. They sit there on a Zoom call saying nothing until I ask them, well, how much are you asking their client directly. I look them in the eye and say, how much are you looking to sell your business for on the Zoom call? And that's the only time
That's the only time they speak.
step in.
So on that On that, what are some of the key points when it comes to negotiating? Because I think a lot of people may struggle with negotiating and how to articulate themselves, how to just strike up a good deal. And I guess that's a skill that everyone in business needs to have.
Yeah, it's a generic skill, isn't it? Whether you're negotiating is commercial contracts or if you're in the sales environment.
Exactly.
It's generic. In the M&A space, it's a good point that you make. Most business owners can't negotiate the sale of their business.
Yeah.
And definitely they struggle when they're asked by someone like me on the other side of the table, how much do you want for your company? What they do is they laugh, right? Then I know that they have got a number, but they don't really want to tell. And they've probably been briefed by the broker that's representing them, don't give a price. But they haven't been briefed very well because they don't know what to then say. Then that's when the broker chips in and says, oh, well, we're just looking for indicative offers. I say, oh, right, so you want a Dutch auction then? Not interested in that. Because I can argue it both ways because I've got experience on both sides of the table. And when a business owner says, oh, inviting indicative offers and then we'll get back to you, or the broker does more particularly, I'll just say, look, we don't want to waste anyone's time. So we need a ballpark figure from you.
Of course.
And then I shut up, see how they fill the space.
But is that a good, because I've heard this before, in negotiation, it's good not to speak too much. I think some of us sometimes think, we need to know what to say at any given point, where sometimes it's best to just say what you need to say and be quiet and let the other person speak.
Silence is really strong, yeah. And if I have a criticism of salespeople, and I've been in sales for over 40 years, building sales teams, coaching salespeople, one common issue is they talk too much. A friend of mine, Marcus, once said years ago, he said that they show up and throw up.
That's a good one.
They go into pitch mode. And of course, the secret of selling anything, including a business, is to ask questions of the other person. Because obviously then they feel that the other person's taking an interest in them. More particularly, when you ask questions, you find out a lot more rather than going into pitch mode and presentation mode. And one of the secrets to a good deal is finding out how purchasing your company will benefit them going forward. Mm-hmm. If you can scope that out in a meeting, you're halfway there.
Okay.
Because now you're starting to put yourself in the other person's shoes. And simply, when you're buying a company, is to ask insightful questions. What are they going to do after they've sold? Would they like to stay in the business on a retained position, or do they want to stay in, or do they want to move to the Bahamas and lie in a hammock and have cocktails brought to them on the beach?
That's the dream for a lot of people.
I think those are lovely conversations between potential buyer and seller, because you get to the human bit.
Of course.
And business is business, but actually underlying it, we're all human. I think that's where conversations become very productive.
Couldn't agree more.
One party is starting to see it from the other person's point of view.
It's almost like in sales, you have to come round to the other side of the table and sit next to them instead of sit across from them.
Yeah.
Yeah.
When I'm on the sales side, I always say to my client, never, ever, ever give a price, even when you're asked. And then when I'm on the buy side, representing my client who's acquiring, I'd say the first thing one of the early things we're going to do is I'm going to put them on the spot and ask them how much they want for their business. So there's different rules depending on what side of the table you're on.
Okay. Wow, that's great. Very valuable insight there. So on to some of the challenges. I know you mentioned you see that there's less and less deals each year coming through. What are some of the biggest challenges maybe you see other firms facing in terms of sourcing high quality deals, and how do they go about doing that, normally?
Yeah. There's a whole variety of ways. There's definitely a plateauing of the number of deals, maybe even, and there can be dips in certain years as well. And we've had a couple of years of slight increases in transactions since COVID, but who knows over the next couple of years what might happen. Key thing, if you're running a M&A advisory firm, is to get good quality deal flow. So that means taking on businesses that are sellable at the price that the current owner is looking for aspirationally. And this is where a lot of business brokers fall down majorly, is they overpromise and underdeliver because they don't have an honest conversation with the business owner about the value of their company. In fact, they'll go the other way. They'll flatter them with an overvaluation, because what the business broker is looking for in those situations is the retained work. If it sells, but they want the retainers, the monthly retainers. And it's quite widespread. There are good guys there, and I know of them, but we're definitely in the minority. There's a lot of companies out there that are more interested in the retainers than the success fee on completion. So what we do at S Cubed is we will run a saleability report. So we get our client to answer 80 odd questions. It's all online. And you can see on a spider diagram how close they are to being sale ready or not. And if they're not sale ready, it will identify, this report, the areas that need addressing and wrinkles ironing out. We're unusual. Not everyone does that. If it's not ready to take to market, then we'll say, we can go to market, but you're not going to get 5 million. We think you're going to get 3. So do you want to sell for 3 million? Because that's the likelihood. Or do you want to spend the next couple of years or so growing the business so that the enterprise value is 5 million plus? What do you want to do? So we give them the choice.
Yeah.
Because we can certainly work with them on our scaling up program as a business mentor to help them steer that path of growth, of scaling up. We don't mind, as long as they're a client, we don't mind whether they take the longer journey, where they could sell their company for what they're more likely to sell their company for what they're looking for, rather than having to make do with a discounted price.
Makes sense. That makes sense. And when it comes to maybe off-market deals, how do you go about acquiring those kind of deals? Is it mainly through like relationships that you built up over the years, like conferences? How do you go about?
Yeah, it's a hard one. Because there's on-market deals, which are usually through a broker, and there's off-market. When you contact an off-market company, by definition, you've called them out of the blue. Their mind really isn't about exits.
Mm-hmm.
It's about growing. So I think it's really a matter of planting seeds, because I've always argued that when you start a business, you should have the end in mind. So when you start a business, when do you want to exit, and how much do you want to take off the table when you sell it?
Mm-hmm.
Once you've got that end point, then you can look at, okay, over the next few years, these are the things, these are the strategies, these are the tactics to end up where I'm looking to end up. Most business owners never do. They're not looking longer than the year that they're in.
Yeah. They're in the weeds.
Let alone 10 years' time or 15 years' time. So I would always encourage clients or business owners to start with the end in mind, have a magic number, and which year do they want to crystallize that magic number and close one chapter in their life and start a new one. And that gives them a sense of direction then, and a sense of urgency sometimes as well. Otherwise, when is enough enough?
So I'm guessing on your side, you have to almost be quite good on top of nurturing relationships over the long term, because it's not, as you said, it's not just, rock up at the door and say, yeah, I'm buying your business today. It's quite a long-term play.
And you're absolutely right. And also, if you press the point with them, they'll close up. They'll be defensive. So it is about the seed sowing, trying to get it the right way around. That's why I put out regular content on LinkedIn, because I keep in front of people with hopefully meaningful content that's useful for them. Also, we will be running this year a series of SME workshops, half-day workshops, free to attend, taking them through some of the key topics, some of which we've covered in this podcast or touched in this podcast. Mm-hmm. Again, it's another contact point with prospective clients, because they'll think well of you. And when the time comes that they think about selling, you should be, and that's the hope, we should be the first person they think of.
Yeah.
Particularly with the social media content. It just keeps us in front of them. They might have a beauty parade, and that's fine. They might go to a couple of other providers. No problem at all. Very happy for them to compare us with others. One thing that makes us quite different in S Cubed Advisory is that we're all business owners. with other businesses.
Mm-hmm.
So we're not just employees doing a job, trying to earn a commission. We actually understand the business owner's lot. We can empathize really well with the business owner's journey.
Gotcha. No, that's really, really important. Really important. Do you think then that a lot of other firms are quite transactional and see it more as a numbers game to kind of strike big?
That's almost a leading question, Ryan. Yes, they are. And if you've never been a business owner yourself, it's very hard to empathize with your target market. It makes us distinctly different. Yeah, for sure. That's not to say that we're not unique. There are other providers out there that take a similar approach to us, which is that sort of high touch, low volume approach. I think that's right, because every client deserves sufficient time, effort, and energy to get the deal over the line, because this matters to them. It's probably the biggest sale they're going to have. There's likely to be more money generated than the value of their house quite often. We're talking about multi-millions. So it could set people up for the next stage of their life. Maybe it's retirement, maybe it's to become an investor in another company, but it's really setting them up to give them financial security and to change the direction. So we take it, Paulie. For us, it's never been a factory production line of client reference numbers. Dreadful. I'd hate to work in a factory, and I'd hate to work in an M&A factory. Bespoke service where people understand your lot and can tailor something to get you where you want to be, which is to sell your company, take cash off the table, and enjoy the next chapter in your life. That's what we're about.
Oh, definitely. So on to processes now. Have you used or are you implementing any kind of AI software, AI tools to make your job easier? Whether that's finding deals, whether that's, just internally with workflows and stuff like that. How are you thinking about that right now?
Yeah. It's definitely at the forefront of our mind. So it's creeping in, and I'm a guy in my 60s now, so I'm a bit late to the good people like yourself that are not in their 60s. Technology generally is more easily absorbed. I have been using AI in recent years. I use it on LinkedIn. It's quite good. When I do a post, I always use the rewrite function to see if AI can do it better than me. I have to say AI can do it better than me. Not always. But it may be that it's just a bit of the phraseology that's improved. And so we can always learn. I've used that on LinkedIn with doing social media posts to compare and see if it can come up with anything. We also use AI as part of our research when we're looking for target companies. It gives us a good starting point. The problem is you have to put in the right question to get the right answer.
Sure.
So it isn't just a matter of tapping away on the keyboard and up comes a list of 50 potential targets.
It's not a silver bullet, no.
No. But it is an aid. If you've got the research skills and the commercial nous, you can use AI to shorten the process of research.
100%. And I think, it's been very useful for me. What I've realized is that I know a lot of people talk about AI taking over people's jobs and it's just going to obliterate everyone from the face of the earth. But I think the future is going to be using your own specific knowledge and letting AI aid you, as you said, with that, and merging those two together to get a better outcome. I think it's going to be.
I see it as a very useful tool. And look, we'll see where it goes. I've been corrected by a friend of mine who's it's one of my fellow shareholders in S-Cubed. He said ChatGPT is not machine learning, but it's the entry point for many people, including me, to get used to using a tool like that. So I definitely within the research side, and also with creating marketing content. I haven't used it yet, but I will do this year, is writing some presentations. And workshop content. I've never done it before. I've always written from scratch, but it would be interesting for AI to come up with some alternative approaches and ways of formatting things. Images.
I'm sure there's a tool that you can actually put just the text into the presentation or the idea, and it creates the slideshows. It creates everything for you.
Yeah, I've done it with ChatGPT in terms of I want to do it. I guess I have played with it in the last year or so. I really test it out. I want a workshop to cover these various points. So yeah, I'm a late comer, but I'm not resistant to it.
But it's still early, and that's the
It's
most
very
important
early.
thing. That's the most
Yeah.
important thing. I think some people are scared of it, and we should actually just embrace it and see it as something that's going to help us going forward.
Even this morning, I saw a Facebook ad, which was a AI software, where someone can represent, there's an avatar that represents you and they present what you're doing. I had a quick scan to look at it and I thought, well, is that something that we can use in some shape or form? I don't know whether you've come across it.
Is it like an AI influencer? Is it along those kind of lines? It's like,
It was I don't know. It was more like I'm your presenter for such and such. So
oh, yes, I've seen it. Yeah,
yeah, so I wasn't too sure whether we could use it. I do like what ABBA have done with their holograms.
that's really cool. Really cool.
Maybe I don't need to attend any workshops. We could just do the ABBA way.
That's it. Well, that's a really good idea.
I've got evergreen marketing content because even if I stop breathing, my legacy will live on.
We'll continue. But that's where we're going, and I'm surprised how many people actually show up for those kind of concerts as well. Like, jam-packed arenas.
I love the music.
Yeah,
I hated ABBA when it came out. I thought it was very dross, and I was into heavy metal.
Mm-hmm.
But as I've got older, I've softened, in my opinion.
Yeah. Great, man, great. So we're just going to wrap up, Rob. I mean, it's been a pleasure having you on the podcast. Appreciate you taking the time. Before we go, is there anyone thinking about getting into M&A? Anyone thinking about buying a business right now? Just leave us with a couple pointers that they can get some value from.
Yeah, take your time. Don't rush. Keep your money in its bank account and ask searching questions. So there'll always be another business to buy. Or I think a lot of people jump into, if they're doing startups, they get an idea, they get excited, and tomorrow they've set up a company name and registered for VAT. And take your time.
Yeah.
And if you've got a full-time job that's paying quite well, don't ditch that. Run a business. If you're starting a business, run it as a side hustle, as long as it doesn't compete with your employer.
Yeah.
Obviously, the attrition rate for business startups is eye-wateringly high. 40% of businesses startups don't get beyond year 3.
Mm-hmm.
So take your time and let it ferment like a good wine.
Great. That's perfect, man. That's perfect. And where can people follow you? Where can people buy the book? Just remind them again.
Yeah, well, at Amazon, I've got several books out, but the 11 Commandments, 7 Cardinal Sins is on Amazon. Royalties go to charity, mental health charity. If they want to get in touch with me, probably LinkedIn, Rob Goddard is the best place. I will link with anyone. I'll unlink with them if they start pitching to me within a nanosecond of the connection. But I'm very happy to connect with people. If they've got a particular query or question, they can DM me on LinkedIn. We can engage in a conversation.
And you said you've got some events coming up as well. When were they again?
End of March, got the first one in London, and then every quarter. So it'll be on our website, which is s-advisory.com, s-advisory.com, and they can register for that.
Perfect. Well, thank you, Rob, again. Pleasure speaking to you. Drop some amazing gems. And yeah, guys, go and follow Rob.